Stocks are rallying into the close after the Fed minutes indicated that officials are ready to raise rates, but slightly dovish minutes. Mohamed El-Erian, Chief Economic Advisor at Allianz, joins us. Mohamed, great to see you as always. Thanks so much for joining us. My first big picture question on where we are with the markets is the extent to which now these rate hikes are priced in such that the majority of the risk to equities when rates go up is already removed.
I don't quite think we're there yet. We're getting closer to that point, but we're not there yet. The good news is that the marketplace is forcing the Fed to do two things. One, to recognize that we have an inflation issue, and second, to be open to moving faster on policies. What we don't know yet, Wilfred, and this is important, is a combination of rate hikes and QT and what that does to liquidity and what does that to market functioning. So we're getting closer to that point, but we're not there
yet. In terms of the way for people to play this, is it going back into some of those equities with the most solid sets of earnings and cash flows like those big cap tech names, or are they still at risk because their multiples are still a little bit of a premium to the rest of the market?
So what the market needs is a common theme, a unifying theme. That used to be liquidity. That's going away. That's what inflation does. It takes that theme away. Earnings is the best replacement, and that's why these earning releases are really important. So the hope is from a macro level that earnings can play that role. From the micro level, it's all about name selection. It really is. And you want a few things. You don't just want strong, resilient balance sheet. You also want pricing power. Pricing power is going to be really important over the next few months. And then you want relatively low sensitivity to labor shortages and to supply side chains. Now, when you solve it that way, some of the names you mentioned do dominate.
Mohamed, where do you think inflation is at the end of the year?
Sarah, I wish I had a good answer for you. I think we have two equal probability events. One is that inflation stays high, call it twice the level that the Fed wants, 4 to 5%. But equally likely is that the Fed overreacts and we end up with low inflation, but very low growth, if not a recession. These are equal probability events. That's why it's hard to answer that question. Now, there is a positive tail, which is you get some sort of productivity boom or something that helps the Fed catch up because it is way behind. And the left tail, the one thing we want to avoid at all costs, is stagflation. So my answer to you is either we're going to be at 4% with a growing economy still, or we're going to be at 2 or below and near recession.